to talk about investments. Investments are my favorite topic, and it is about the money. So, it's time to sell your rent house. Now here's some things that may help in your decision making. You might say, well, it's just real estate, right? No, it's much more. Selling rental units or commercial property is a specialized field. Now a person would think there are not that many difference between selling a rental and selling your personal residence. They're just houses. But that big difference is how you will be taxed. Now here are a few things to consider. Depreciation recapture, capital gain, state capital gain, 3.8% Medicare tax, mortgage over basis, a short-term hold versus a long-term hold. For most folks and brokers as well, these are unfamiliar terms. And most of the time we don't think about tax when selling our personal home because of the homeowner's tax exclusion. But if you're in a high tax bracket and the home has gain over $250,000, then yes, you will have a tax impact even on your personal residence. So as a broker, we need to know when to advise the client to get a CPA or a tax attorney. The deal can be complicated and have serious tax consequences. Now, a CPA or tax attorney can advise you on how to structure a sale to avoid the recognition of gain and defer the tax to a later time. Now, if the property is not your client's personal residence, then you need to be aware of the tax problems the client may encounter when he goes to sell. But today our focus is primarily on rentals, not personal residence. So you put the house on the market and you get an offer. Hopefully at this time you get a seller's net proceed estimate from the broker. Now this net proceeds form has no basis calculation. It should have, but it doesn't. Now hopefully you, the CPA or the broker, has completed a tax basis calculation to determine what you may owe the IRS. Also, at this point you need to decide if you're going to structure the sale as a 1031 transaction or just pay the tax. Now you may discover you owe quite a bit to the IRS because of gain and depreciation. But here are two choices that you have. You can pay the IRS, or you can invest the proceeds into another property and defer the tax until a later date. There are some options, but we're not talking about that today. Now, whichever way you go, that IRS bill will certainly impact your investment. Could be for better or for worse. Now, remember, after closing, you cannot change your mind. There is no retro 1031 exchange. When selling rentals, oftentimes this is what clients say. I didn't have a gain. I'm selling for what I paid 10 years ago. Okay, did you refinance? You can still have a gain. You may have mortgage boot if you have pulled money out through a refinance. And you will certainly have depreciation recapture. Also, another common thing that clients say, well, I didn't take depreciation, so no recapture, right? Not so. The IRS says you must recapture all the depreciation you were entitled to regardless of whether you claimed the deduction or not. So here's the gist of that. Depreciation is not a selective choice. Now here's what I do on every investment property. I do a basis calculation to determine if you might have a tax problem. Then I recommend a CPA or tax attorney. Because these tax charges can completely change what you thought was a good sale for you. May not be a good sale at all. So let's look at the form I use. I've already filled it out and I'll just put it up on the screen. So you have $94,000 invested in this property and you sell it for $155,000. As you can see, you may be able to defer over $20,000 in taxes. So the big question would be, why pay $20,000 when you can use that money to purchase another property? Now, from the rent house example, the form indicates that if you choose not to do an exchange, you lose the $20,000 on your 16-year investment. Now, by completing a 1031 exchange and deferring the tax, you have at least $20,000 more to reinvest. So the answer is, selling an investment involves so much more than just the sale of a house. Now, here's one reason, a big reason. An investment is about making a return or profit. We want a return on the investment and a return of the investment. In other words, every investor wants to make a profit and get the initial investment back. And the investment is also about deferring tax, building wealth, and supplementing your retirement. Now, here's some additional points to think about for your investment. Every property held for investment is subject to gain and depreciation rules. If you rent a house for any length of time, it cannot be considered your personal residence. It is an investment and tax rules apply. You do need a qualified intermediary, not just your closing agent that's going to hold your funds in a trust account. The exchange has to be like kind. So, my recommendation is get that basis calculation and talk to a CPA or tax attorney. I can certainly say with experience, calculate the tax because your profit depends on it. My contact information is on the screen. If you would like to talk about selling your rental property and move it up to something bigger and better, or gaining more depreciation or cash flow, give me a call or send me an email. Thank you.